Hello, everyone. Welcome to today's live stream. I hope you are doing well. And the weather is getting better over here. And I hope it's the same where you are. So, today we're going to be looking at some core concepts about the bear market, something we commonly refer to as crypto winter. So, what does that mean? What does it imply? So, I'm going to share my screen to walk us through what we have. Just a quick sound check here. Let me know in the comment section or in the chat if you can hear me very clearly. Thank you. Okay. Okay. So, as you know, this is not a financial advice by any means. It's just my own opinion, sharing my perspective on the market and how things are going. So, don't take this as a financial advice. Thank you. What do we see during crypto winter? What do we see during this period? Is that there is a continuous decline of price action. So the price of a commodity or of an asset continues to decline, and that is what we call uh, crypto winter or the bear market. So when you see that continuous decline, when you see that uh, things are not moving as expected, and it's like you're seeing your portfolio drop by 30%, and yeah, it's a little bit scary, right? I know. So, but there's going to be a lot of noise in this period. You know, a lot of fraud. That's fear, uncertainty, and doubts. People saying, "This is what is going to happen." Of course, no one knows, but they will be predicting or speculating where things will go, and yeah, that's going to create noise and confusion. So, if you don't know what you are doing, you're going to be a victim of the noise. So, ensure that there's clarity amidst the clamor. And also, there's going to be a lot of volatility, right? So you have to plan. If you don't have a plan, you know what they say about that. Failing to plan is planning to fail. So if you don't have a plan for the bear market for this season, then you will know you'll be taken by surprise. So you need a plan. And another thing is the importance of the quiet periods. What are you using this time to do? It's time that you can use to focus on other things, right? So, what do you use that time for? That's what we're looking at today. What are you using the time to do? And yeah, so let's see. So, you're going to see significant market valuation drop. So, something that was $100 now it's going to be probably trading at 70, at 60. So, technically, it's on sale. It's going to be dropping. Sometimes you can even say 50% drop and constrain liquidity and investment. So liquidity just mean money, money in the market, right? And so in a bear market, you're not going to see a lot of money because everyone is holding onto their buy, kind of holding onto because you don't know. There's uncertainty, there's fear, people are doubtful, and you don't really know where things are going. So you just want to, sit on the sidelines. You just want to watch. You don't want to be hasty. You don't want to be rushing or be overwhelmed by emotions because sometimes you can allow yourself and you get overwhelmed because there's so much negative news going around. Oh, market is crashing today, or interest rate is going up tomorrow, or there is fear of an imminent change of governments, or just I don't know, or weather conditions. a storm is coming, it's going to affect this part of the city or this part of the nation. All that could play into the fluctuation in the market. And if you are a trader, this is not a time to be trading continuously. It's a time to be careful. You know, small trading volumes, small capital, just to be careful and exercise discipline. Discipline very important at this time, and heighten regulatory scrutiny. So we're going to see a lot of regulations from the government, probably on some assets. This has been classified or declassified. Just so many news. So be careful there. But during winter, as you know, you can actually build in the code. It doesn't mean that you abandon everything and run. You can start building. You can start consolidating your position or your portfolio. It's a time to get back to the drawing board, re-strategize how you're going to engage the market. It's a time to reorganize your portfolio, right? So you don't just say, "Oh, it's winter, then I'm gonna quit," or "Oh, it's winter, I'm not gonna do anything." No, you start planning, you start strategizing on what to do and what not to do. So, what are the things going on in this period? It's time for skill building. Very important. Uh, you can start learning the new skill during this uh, downturn, and you can also start creating your own platform if you want. You can start creating your own platform, or you start doing research. Start researching on new coins, or just do your own market research. This is a very good time to do research, because when the price of an asset drops, it kind of drops to the true value of it. What you see on, probably you go to the stock market or you go on crypto charts, you're going to see a lot of swings. That means high volatility. The price is $200 today. Tomorrow is at 150 or 180. So a lot of volatility up and down. But during the bear market, it will come to the true value. So something that was like $200 can come down to 100 maybe. So that becomes kind of an indication of the true value of that asset, right? So do your own research. All right, don't depend on anyone to do the research for you, and don't listen to people saying, "I've done the research, take this one for me." No, you have to go do your own research. Very important. There's a link in the description of this video. If you've not seen our other video on doing your own research, I think you should go check that out. It will guide you on what to do, because it is you that will do your research. Don't depend on any institution or any person to do the research for you. You have to do it yourself. What else do we know in this period? So, and you have to also watch out for the team's activity, like what the developers are doing. What are they doing in this period during a bear market or during the crypto winter? Are they building a new feature? Are they working something in the pipeline? What is in the roadmap? This is 2026. You want to look ahead towards 2027 or probably later part of 2026. Is there something that will be released? Maybe a new feature. Maybe there is a layer two that is coming up. Something like that. Just what are they developing? What is it? Are they working behind the scenes? Infrastructure upgrade. Making the system more accessible, or ease of use, or strengthening the security of the network, something like that. and also accumulation. Are people buying more of the coin? Are they buying more of the token? So look into the accumulation aspect of it. That will guide your decision. And understand that you are sowing seeds, right? And as someone that is sowing seed, you don't go dig up your seed from the ground. You leave it there, you know. So patience, patience. Be patient. Don't rush and don't panic. Be patient. Have you noticed that sometimes when your portfolio drops by 20% or 30%, then you look at the particular coin and you decide, okay, I don't think I'm going to hold this anymore, and you sell it. The moment you sell it, the next day, then it goes back to the previous value. So yeah, don't panic. There's a lot of people that will panic sell, and that's what drives uh or what changes the price, right? Because people will be panic selling. Don't do that. So trust the process. Seasons come and go. It's not going to be permanent. So you need patience. Don't dig up your seed. Then trust the unseen progress behind the scenes. You know, trust the process. What's another thing that we see here? So another concept you can apply here is dollar cost averaging, DCA. So there you are buying at a particular amount, you know, over a period of time. So it's $50 every week or $50 every 2 days, something like that. Dollar cost averaging. So you taking advantage of the the pullbacks, and it will average out along over a period of time. So that means accumulation, consistent accumulation. It doesn't matter if the price of the asset is has increased by 100%, you are still buying. It has decreased by 20% or so, like that. So you just keep buying because you've given yourself a target or a timeline that over a period of say 6 months, I'm going to buy this at $100 every day. That's dollar cost averaging. So it doesn't matter what the price is doing. If the price, you know, has gone up or is going down, you keep to your plan, consistently over that period. So you remove emotions. You are not moving according to emotions. You are trusting the process, and you are lowering your average cost. So maybe the first time buying it, the price is like say $50. The next time that's come down to like $40. The other time $30, then goes back up to 60. Then you still buy. So your average cost is going to be somewhere around that 40 or 35, somewhere there. So yeah, crypto winter, it's just another time for a bear market. When there's a bear market, then people describe that as crypto winter. And just like any other winter period, of course, uh, it's cold, and the market is cold, and there's fewer movement. That means fewer volatility. It's going to be boring for some time. You don't know what's going on, or after some time, a lot of people will quit. A lot of people will pack their bags, say, okay, I need to look for something else to do. But that is the actual time to start accumulating. That's the time to start building your portfolio again. You reassess where you are and you plan. So the builders remain. The noise, after the noise is gone, the builders remain. And it's an opportunity to learn. So there's going to be volatility, but then it gets boring. That's a stagnation period. It gets boring. It's like nothing is happening. And but that is the time to start buying. The time to start buying is that period. So I'm gonna show you the chart of what happened in 2022 during the bear market, where things were, how boring it was, and people were leaving, panicking. But that was when the market was actually bottoming out, and people were smart people were accumulating at that time, like whales. The whales were accumulating because that's what they do. When everywhere is quiet, then they start accumulating. So let's go here. Okay, so this is Bitcoin chart on the daily time frame. I'm gonna change the time frame here to the weekly so that we can see the chart over a long period of time. So can you see on the weekly? Okay, let's try maximize. Okay, right. Okay, here we are. So you can see here when you see things like this. So where's 2022? Okay, here 2022 from August 2022. So no, from July or June, from June of 2022. This period here, let's draw a line over there. So here, you see this? Let's call that line one. Let's draw another line. And then we call this line number two. So you can see the market bottoming out here. Um, so after this drastic drop from the top, about 69,000. Yeah, about 69,000. Then all the way to 16,000 thereabout. So you can see quite a huge drop here. But at that point, I think this was the collapse of is it Terra Luna? Yeah, most like Terra Luna somewhere here, or was it here? Yeah, I think here. So it was just continuous bleeding every day, continuous bleeding. And this is on the weekly, by the way. So each of these candle that you see here is representing 1 week. So, and as you can see, a lot of selling, people were selling, but it started bottoming out. And at this point, people start panicking, right? Because they thought you were, it was going to, so yeah, was at 19,000. And they say, oh no, 19,000, that was the previous high. You can see here, previous high in December of 2017. But there were so much uh, people running out, and also because there was so much fear, people thought it was going to average out or bottom out around 9,000 or 10,000. So there was a lot of fear, and they start selling. They were selling every day. They started panicking, just like people are doing now. There's a lot of panic going on right now. So they started panicking, started selling. But guess what happened here? So you see, so from June, smart money started buying. Can you see the volume here? You see the volume? See the green candles? The green candles. That's the buy volume, right? So they started buying here. There was another drop. That was the final bleed out in November of 2022. And then after that, by January of 2023, it started taking off. So you're going to see same thing or similar thing in this market as well in this period because it's just a cycle, right? It goes. Is it a 4 year cycle or something like that? So when you see that cycle, this drop was to from this high. Let's use the fib to see where things are. Okay, so we do the fib retracement. This was the high. High to the low. One. Okay, I'm gonna change this. So let's delete that. The fib from take from the low this time. From the low to the high. So this is the Fibonacci retracement. If you're not familiar with the Fib retracement, it kind of tells where price action will retrace or consolidate. So here we've seen after a drop, so it broke the 76 fib, so not a good sign, and did almost a full cycle retracement. So this point here, uh, between 50 and 60, you have that golden pocket zone here, golden pocket. So the Fibonacci retracement tells you where possible reaction points where price action may retrace. Okay, we'll take that off the charts. Go up, go. Okay, we're gonna take this out, delete. We're gonna add another indicator here. Um, the RSI, Relative Strength Index. So we're gonna add the RSI there. So, and if you know how this works, you can see the RSI. So this is the weekly chart, right? Uh, so you can see a lower low in price action on the weekly. See the lower low here. And on the RSR, you see a higher low forming. So there's a higher low forming here. So it's whenever you see a lower low in price action and a higher low in RSI, that's a bullish divergence. So that's bullish divergence forming right before your eyes. So if you were to go back in time in November of 2022, here you will start buying. You will start buying because you can see that there's a bullish divergence that is forming. Now, does that mean that the price is going to pick up the very next day or the the moment you buy? No. Yeah, this is a 4 weeks. Uh, yeah. No, it was uh, November 7, 2022. Now, it didn't start recovering fully until around January of uh 23. So it's there. It took about 2 months to recover, but the bottom was already in. You can see here that the bottom is in. Now, can we apply this same logic to where things are right now? So let's look at it on the. We are still on the weekly chart, by the way. So look at the weekly charts here. So we don't see any bullish divergence on the weekly. Look at the RSI. It's still plunging. You know, it's still going down. Can you see? So there's no bullish divergence. That means that what I would do here, this is my own opinion, not a financial advice. It's not a time to start aggressive accumulation. No, it's a time to be careful, to, if possible, so just sit on your hands, stay on the sidelines, just watch, because there's no confirmation of a bullish divergence. And you only start the aggressive accumulation, uh, or unless you want to do DCA, which is also a good strategy. But if you want that to pick up something that is right at the bottom, then you wait for that confirmation. And remember, like I told us before, you can't use just one indicator for a confirmation. It has to be a confluence. So one or two or three. It has to be more. So here, uh, the RSI was already pointing to a bullish divergence. We see here lower low in price action, higher low in RSI. Also, we see the volume, right? This was like the last massive sell pressure over here. See that volume spike? Uh, Monday, yeah, the Monday 7th of 22, November 2022. So that was like the last selling pressure. But look at the RSI here, February 15th of 2026. RSI is still down somewhere at 28, and it can actually go all the way to 10 or even below 10. So there's still there's still more room for a drop over here. So it's like here, right? Can you see what I'm in June 13th of 2022? RSI was somewhere here, and that will give room for, you see. So it's almost at the same place, almost, right? What was this value here? This value was 26. RSI was 26 as of June 2022. Here, RSI is at 28 as of February 15, 2026. So there's still more room for downside. Now, what does that mean? If you apply the same logic, what happened in 2022, the RSI kind of took a hit right here, you know, in June, and they recovered. Look at the recovery. They recovered. But the price action made another drop. And I believe that's the drop that you kind of watch out for on the charts. Not the first one. You look for the second one, at which point the RSI will now form a higher low. Look at RSI here. The price is lower than the previous drop, but the RSI is higher. So let's apply the same logic here. Uh, so for instance, let's assume that we are now going to fast forward to June of 2026. So by June of 2026, this is speculative. Let's say that RSI has recovered. So you're going to see a recovery. Let's draw a little line here for the recovery. You're going to see something like this. So this is June of 2026. You're going to see the recovery. Okay, you're right here. Now let's do the same thing for the price action. So, but what happens to the price action? So price action slowly recovers in like manner, right? So recovering at 74, 75, and then all of a sudden makes that second low, makes the second low around 50,000 thereabout. So that's my own theory. Make the second low about 50,000. Now, what's going to happen to the RSI at that point? If the RSI makes a higher low, then you know that the bottom is in. You know the bottom is why? Because now you have that bullish divergence on the weekly. You're going to have a lower low in price action and a higher low in RSI. Oh, sorry. Yeah, right here. So So can you see the picture? Can you see the picture in 2022? Lower low in price action, higher low in RSI, bottom is in. That's on the weekly chart. Now, if you see the same thing in 2026, probably in June or July, I don't know. This is my own theory. So if you see that same thing on the chart, then just know also the bottom is in. So when you see that lower low in price action and a higher low in the RSI, then the bottom is in. So that's the signal. But I don't know. Is it going to play out this way? I don't know. I'm just uh, putting out my own opinion and what I think will happen. It can also be that there won't be any immediate recovery. You know, there won't be immediate recovery. So what does that mean? What does it look like? You're going to see something like this. You form that low and then you start going sideways, 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 sideways. A little bit up, a little bit down, like that, sideways. Can you see? Until you get to 30,000, 30,000, 30,000. And from there, hopefully, then you start recovering. So what's going to happen to the RSI? As you are doing that, going sideways on the price action, the same thing, right? Same thing with RSI. RSI starts recovering down, then massive recovery, and then down like that, down, down, recovery again, down, and it keeps going like that. So that's that's my own theory. That's my own theory. Is it going to go exactly the same way? I don't know. I don't know. But that's just one aspect of it. There are other factors at play, but this is just one theory. Now let's go back to our information here. So builders remain during the bear market, during the winter period. What else do we know? This is the time to learn the technology, uh, investing in some quality skills that will help you. Difference between price and value. So in the beginning of this video, I mentioned that the bear market reveals the true value of the asset. So the true value of the price, the true value of the token or of the coin is going to be revealed. It's for something that was like $100 falling to $50. Tells me $50 is actually the true value of it. $100 was just the hype. So you are going to understand the difference between the price and the value. The price, remember, the price is what you pay, and the value is actually what you get. Okay, let's go back here. So it's a time to grow, personal growth, knowledge as foundation, enduring through the storms. So this is a time to grow, a time to invest in your own self, and quality over quantity. You've been holding, maybe in your portfolio, you've been holding about 20 coins. Why do you need 20 coins? You just need about five solid coins, you know, or 10 solid coins. But anything more than 10, that's an issue right there. And so it's a time to start removing weak asset, go over the fundamentals and consolidate your portfolio. You don't can't be carrying over things that are not performing well, over a long period of time. So quality over quantity. It's not about having 20 coins or 20 stocks. It's about having the good ones, something below fair value if you're lucky. So look for things that are on sale and then buy them. That's what I do. That's my own strategy. I don't know what works for you. So you have to figure out your own pattern. What works for you? Do you like buying things when the price is 1000% above the fair value? It's up to you. I don't like that. I like some value for money. So I like when it's on sale or when it's below selling price if I can get it for that amount. Okay, so consolidate your portfolio during this time. Personal growth, pruning as preparation, peace and simplicity, and nurturing. You are nurturing yourself, and understand that these are seasons, and seasons come and go. So just like we have the spring, summer, fall, and winter, it's just a season, and it will go. So make the best of the season. Make the best of the season. Embrace both ups and downs in the market, and yeah, so that you'll be at peace. If not, your emotions will be all over the place, and when your emotions are out of control, you start making poor decisions. So when in doubt, what do? You zoom out. So zoom out when in doubt. Perspective brings peace. Let's go back to the charts again. If you go back to the charts here, let's go here. So if you look at the charts, can you see where price action is over here? And can you see the previous bottom in the bear market of 2022? So here, 16,000 thereabout. Yeah, around 16,000. And here you are 68,000. So when you zoom out, it gives you a good perspective of where things are. So you are 68,000. And here, the bottom of the bear market was at 16,000 somewhere here. So you are far away from the bottom of the market, the bottom of the 2022 bear market. So, and we are on the weekly time frame. If you go on the daily time frame, if you go here, let's go to the daily time frame. See, it looks very red, right? Because the high was here. Look at the high at 126, and now you are 68. So almost half. You're getting closer to half price. Um, 63 will be half price from 126. So you are somewhere close to half price, right? 50%. So your portfolio, if you bought, and that's one other thing, right? Never buy anything that is printing uh 200%, 300% in a day. It's not a bad idea because it means it's it's already overpriced. It's overpriced, and when something is overpriced, you're going to find the true value. That means you're going to correct. So you don't want to be caught here at 126,000 accumulating or buying. Don't buy anything here. 126,000. Look at it. Why? Not just for the price action that, oh, it's new all-time high. Never buy anything that is new all-time high. Bad idea. Here, so 126,000. Look at the RSI. It's above 70. Anytime the RSI is above 70, it means it's overbought. Overbought. It's screaming. Be careful, be careful. I am overbought. The asset is overbought. So look at it here. Overbought region. So it was already screaming here for you to get out. It's saying get out. Get out of that position. Get out of the market. Since that's a sign. Some people are always looking for a sign or a signal. Say, oh, what's the signal? How do I know it's the top? The sign was already here on the charts. Look, you have overbought signal on the RSI on the weekly. Sorry, on the daily. You're on the daily charts and it's screaming overbought, overbought. Look, so it's about that one. And there was also a retrace here, little bit of a retracement. Okay, can put that there and this one. sign here. So let's move this up a little bit. Okay, great. So you can see this. This is a rising wedge, and rising wedge breaks to the downside more than 70% of the time. So when you see this, it means be very careful because it's going to break down instead of breaking up. I think we treated it in the last uh, live stream, so you can go check out that video. What is this here? So if you're looking at the charts, it will predict where things are going. It will tell you what's going to happen. Is it going to be correct 100% of the time? No. But are you going to be on the safe side? Yes. So if you are following the charts and you're not following your emotions, if you're following your emotions, you're going to be wrecked because you'll be all over the place. But when you follow the charts, it'll be guided, right? It'll be guided. Okay. And it doesn't just apply to crypto alone. It's a general concept and it applies to stocks as well. You can look at the stock market, apply the same concept. How do I know the bottom is in for a particular stock? Well, look at the chart. What is the chart saying? And of course, we're not ignoring the manipulation that happens behind the scenes. Of course, we know that there are some things happening behind the scenes, but generally, when you look at the charts, you should tell where things are going or what's going on. So there's no bottom signal at this point from the charts alone. Looking at the charts alone, no bottom signal. Look at it. We have this low in the price, low in the RSI. RSI is recovering. So is it recovering for more downside? Most likely. Most likely. Yeah, on the weekly charts, if you go back to the weekly, look at what we discussed earlier on the weekly. So there could be that continuous bleeding over the next uh, 4 months, 5 months. There could be. This is my own opinion. So it doesn't mean it has to play this way. It's just my opinion. Okay, so it's time to learn, study, know what's going on. It's time to do your research. Don't depend on calls or signals. There's a lot of you joining groups and joining Discord here and there. Of course, if there's someone that you trust and you think they're good at their analysis or you trust what they are doing and you want to copy their own actions, that's up to you. But you have to do your own research. It's not by joining Discord or join my Telegram page, join this, join that. That will not help you. What will help you is you investing in yourself, understanding what's going on, doing your own research, getting your education by yourself. Because, like I said earlier, you don't have to apply this. Like, if you're not interested in crypto, you say, okay, I don't like crypto, I'm not interested. Uh, can I apply the same concept elsewhere? Yes, it applies elsewhere, not just here, across the market space. You can apply the same concepts. Okay. So yeah, that's about what's going on here. Let's go to the small time frame, like the 4 hour. So you go on the 4 hour time frame. It seems that you are forming another rising wedge. You're forming another rising wedge on the 4 hour time frame. That's what it looks to me. I don't know what you are seeing on your own end. Look at this rising wedge over here. We formed this rising wedge, and when we broke down from it, look at what happened. Now, are we doing the same thing now? Let's see if we are doing the same thing now. So are we forming another rising wedge? So here, where is it? So we form a rising wedge here, right? From here, then we broke down from that rising wedge. Uh, so if you were to form another rising wedge today, it will look at it will look like this, something like this. Do I know for sure that this is going to play out? No, I don't. I'm giving you my own opinion on it. And then here you have probably another line. Let's put another line. Another line. So if you have another rising wedge, you know, uh, that is forming because that's what it's looking to me. It looks like a rising wedge is falling, is forming. So that's 75,000. That 75,000 here, and then bottoming. So this around end of the month, around end of the month, end of the month, and it breaks down from this rising wedge. And you know what happens when you break down from a rising wedge, right? So you're gonna try to recover, and then keep just keep bleeding. Then you're gonna break the previous low. The previous low was here uh, at 59. Let's just say 60,000. So you're gonna break that low. Now, if it plays out this way, of course you don't know if it's gonna play out this way. So if you break this low, then uh, it could be a swing failure pattern, an SFP, and if it's an uh, SFP, then it could be a temporary bottom. So, but how are you going to know the length of this breakdown? How are you going to load? How are you going to know the length? So you're going to take this here. So you see this line here. Take this line. So you take this line here. Just uh, let's copy this line. Okay. So duplicate that line. So at that any point where it breaks, any point where let's say it breaks here. So at that point where it breaks, you put the line here. So that will give you the measure move to the downside. Can you see? This will be the measure move to the downside. So if it breaks here about 69K, if it breaks here, anywhere it breaks, anywhere it breaks, the measure move will be the length of this line here. So let's say it breaks today. It breaks today. Right now, as we are speaking, if it breaks right now. So where's going to be the measure move to the downside? The same thing. You just put the line here where it breaks. Put this line here. So then you're looking at around 55, 56K, 55, 56K as the temporary bottom. So yeah, so it depends on when and where it breaks. If it breaks further down the here, um, maybe here, so you're gonna see the same thing here. Around 55,000 thereabout will be the temporary bottom. So, and does this concept apply to a bigger wedge like this one that broke? Let's see if it applies to this one. So same thing. So can we borrow this line? Okay, let's borrow this line. Copy this line. Okay, so I borrow this line here. Then, so this is the length of the line. Um, okay. So here, so that's the length, right? Length of this break here. Okay. So if you move that line, same thing. Move that line here to where it broke, where they broke the channel. Move it here. So it shows that the bottom around 64,000. And we went below that bottom. We went to 60,000. So that kind of gives you an idea of the measured move. If it breaks the wedge, the rising wedge, right? If it breaks the rising wedge, then you're looking at something in that neighborhood. So same concept here. If it breaks this rising wedge that is forming here, uh, the measured move is going to be the length of this line. So that gives you around 55,000 thereabouts. About yeah, 55,000. So yeah, uh, that's how you can tell what's going on. Another way to have an insight on what is going to happen is by using the uh, sorry, Fibonacci Fibonacci retracement. Yeah, Fib retracement. So if you use a Fib retracement, here, let's see, Fib retracement. So the top is here. Top is here. Uh, no, let me flip it so that let me flip. Okay, hide vision and bring forward. No, delete this one. So let's use a fib again. Now we do from, let's go from the, should we go from this bottom at 50,000? No, let's just go from the bottom here at 60,000. So from 60,000 to around 125, 126, you have, yeah, I think let's take it to 50,000. Oh, here. Yeah, great. So you can see that if you're taking from the top to the previous bottom as uh, at 50,000, then you still have more room, right? The Right now you are playing with the 786, which are around 67,000. So you are between 66 and 67,000, and you don't want to lose that level, 66 and 67,000 zone. You don't want to lose that zone. That also forms a support. If you look here, the support of this zone. Let's look at a brush highlight. So let's highlight it. So can you see? So this huge zone is a support, and you don't want to lose this support. You don't want to lose this support. Let's change the color. Can you see? Is it clear? Let's see. You can change the color settings, line visibility. Yeah, let's something like this. Okay. No. Yeah, light color is good. Okay, so you don't want to lose this zone, this support zone, because the moment you lose this zone, it's bad news. So, and the 76 is right on top of this zone at 66 now, almost 67,000. And if you lose this, you can do the full cycle rotation to the bottom here, the previous bottom at 50, 51 to 50,000. It could go there. If you look at the length of our line here, it's almost close to that 51,000 area. So you don't want to get there. When you get there, it starts getting really bad. But if you are here for the long time, then you are not really bothered about 51,000, right? It's still a good price. Okay. Okay. I think we've covered the key points for today, and I believe. Okay, let's go back. So we've covered the key points, what you should do this time during the bear market, what's the crypto winter is all about. It's this time of the bear market. There's going to be so much noise and confusion in the market, but have that silence, peace of mind. Be calm. Don't follow every news or be overwhelmed by the volatility that's in the market, right? You're going to see your portfolio go uh, decrease by 20%. Some might decrease by uh, 40 or 50%, but don't panic. If you panic sell at that point, then you lose because you're going to be selling at a loss. And you don't want to sell at a loss, right? So another strategy is to dollar cost average, DCA. You know, dollar cost average, uh, particular amounts, particular intervals over a period of time. So you're not panicking, you're just consistently building or rebuilding portfolio, right? It's a discipline of showing up week after week, month after month, and planting a small seed. That's what you are doing, planting a small seed. And it doesn't matter if the sun is shining or if it's raining. You just keep planting. You just keep planting because you are sowing a seed, and you just keep watering it. That's what happened. That's the DCA. You just keep watering the seed. Take out the noise and the anxiety. Just keep watering it. Now, another strategy is education. So education and skills. It's time to learn. It's time to invest in yourself. Study what's going on. Study about blockchain. Study about the market. Do your own research. Because this is the time to get clarity, things that you didn't understand in the bull market. Because bull market is a lot of confidence, right? And but the bear market, the winter period, when everything cools down, then you can actually relax, sit back, and understand the difference between the price and value. What is actually the value of this asset? So use the quiet season to deepen your understanding. Do you actually understand how the blockchain works? Maybe you can do that research. We have a video on blockchain. Check that out. Do you understand the difference between price and value? So this is time to do that research. And also portfolio management. Start trimming your portfolio, start removing things that are not doing well, and what is going to perform in the long term. You start putting them together. So do the portfolio management. Now it's about survivor. When you want to survive, you need food, the basic supplies. It's not time to be building you know beautiful homes. When the survivor, you look at the basic things, basic necessities for life. You need food, you need clothing, you need just shelter, you need a roof over your head. You don't need a mansion. So same thing in winter, in the bear market. You're looking for those key assets, those key coins or tokens that will survive. You don't want to hold 20 coins. You want to hold 5 solid ones. Okay, so you just it's just by like coming back to the basics, right? Okay, another thing here is trusting trusting the market cycle and just see it as a season. And seasons, they don't last forever. Now it's winter. Very soon we're going to go into spring and then summer and then fall and back to winter again. So the market is like that. It's a season, cycle. The downtown here. It's going to be an uptrend very soon. So you're in the crypto winter. There's going to be a crypto summer. So don't panic. Understand the cycle or the season. So just like day and night, it's not going to be night forever. There's night and there's day. Okay, and like I said earlier, don't follow the gurus or anyone that says, "Oh, I know where the price is going." No one knows. Or join my Discord, join my Instagram, join my Telegram. I give signals. I give order. I'm telling you, you have to do your own research so you don't be a victim. Okay, so thank you so much. I hope you're going to apply some of the strategies that we've covered today. And if you have any questions, put it in the chat or put in the comment section. We're going to respond to it. And if there's a particular topic you want us to cover or something you want us to look at in the next live session, let us know. And we're going to look into it as well. And it's been an amazing time today. I hope you've learned one or two things from here. Thank you for joining us. And enjoy the rest of your week. So have a good week. God bless you so much and take care of yourself. And it's still winter. Don't forget that. I know the our weather is changing and we're having good weather, but still dress according to the weather. Dress warmly. Don't take the. It's not summer yet, so yeah. Don't. Instead of you wearing shorts already, it's not the best time. But yeah, if that works for you, it's up to you. So thank you and enjoy the rest of your week.